Hello everyone, welcome to OMI 101 Episode 2. I am your host Phoebe Tan. For today particularly, I would like to share with you one of the benefits of unit trust funds that many may not be aware of. Thanks to our government promoting this industry, capital appreciation from unit trust funds are tax exempted according to Malaysia Income Tax Act 1967. Corporate investors particularly benefit from this. Let's take an example. If a corporate investor places 100 million in a fixed deposit that earns 2%, that shall earn 2 million in interest income. This 2 million will generally be taxed 480,000 according to Malaysia Income Tax Act 1967. This means the net return of the corporate investor is approximately 1.52 million. This is a general principle on Malaysia corporate tax. Please check with your respective accountants on the tax treatment details. Similarly, if a corporate places 100 million in a retail money market fund that plays in fixed deposit, which also earns 2% per annum, that 2 million will be tax-free. This return, however, is subject to management fee, trustee fee, and other fees that approximately sum up to 0.32% per annum. On simple calculation, the total capital gain earned from retail money market fund over the same period shall be approximately 1.67 million. This means comparison with directly placing in fixed deposit, the corporate shall earn additional of 150,000. This looks attractive, isn't it? However, I would like to put a caveat here. According to Minister of Finance last announcement, this tax exemption shall end on 1st July 2021, so let's enjoy this while it lasts. Time is up. Thank you for watching. Please like, share and subscribe to our YouTube channel. We also welcome you to suggest the topics that you would like to hear by leaving a comment at the comment sections below. See you in the next episode and Happy New Year!